station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. You really assemble a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now. I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow down 14, NASDAQ off 5, S&P's off 3.5. Gold contract down $5.90, traded at $1,264 an ounce. Silver off 8 cents at $19.10 an ounce. Platinum up down 5 at $14.05 an ounce. Copper up 2 pennies at $3.15 a pound. Light sweet crude down $1.09 at $94.45 a barrel. Bonds, you have the 10-year down 7 ticks at 125. 30-year off 25 ticks at 138.05. King dollar, check this out, folks. King dollar is up 912 ticks at 83.80. You got the euro down 206 at 1.029. The yen is up 39, trading out at 105.19. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Can you spell failure in an extraordinary way? This is what you have. Cash S&P. We go to 201117. 2011-17. You get over the highs. We're under the highs right now, and all the indices are doing the same thing, folks. We are going to basically have a higher high, and we're going to have dramatically lighter volume. You're talking about right now we're at 369 million in the NYSE. That means we'll come in around 500 million probably. Bottom line, all the indices failed at the highs. Dow Industrials, what did the Dow do? Dow gets to a price point out here today of 17,161. That got over the high of the 153 that was established on the 26th of August, as well as the 151 that was established on the 17th of July. Gave it up on price, gave it up on volume. NASDAQ Composite. Now, this is the one. Composite was always stronger. Bottom line, Composite didn't make it to its high. Try to test that high. Composite right now, really flat, down $6. We're at 4566. All it had to do is get back inside the 4575 area. What that sets up, doesn't set up the lower range yet, but it sets up a 4485. So that's $80 down from here. Gold contract. Let's take a look at gold. Okay, so this is where it's going to get dicey here. This is what we did with gold. Gold's down 580 right now. We went to high today of 1279. We're at 1264. I suspect what's going to happen here is that the 1254 is going to get hit. The 1254, 1259 wants to get hit. That in itself is 134,000 contracts. So what we're doing there is that you're actually pushing into the low, and we're pushing into that low with dramatically lighter volume. So this is going to be the deviance. The deviance here today, folks, is dynamite, okay? On Tuesday, we got down to 1263.10. We did 191,000 contracts. We're only at 134 today. We'll do more of the XAU, the HUI. Let's go to bonds. Bond market out here, TYZ. Bond market, what we did in the bond market is this. TYZ4. Okay. Whoa, TYZ4. Bond market. We're at 124.31. We're down 8 ticks. The bond market, folks, refuses to go down. The thing that's amazing is that I hear all day on the financial news like it's going to be the end of the bond market. well, bond market has been the biggest rally in 30 years. There's no doubt that you had David Tepper, which is an amazing money manager, probably one of the best in the world. He came out this morning and says he thinks it's the end of the bond market. And, you know, we'll see where that shakes out. But bottom line, that got a lot of news. Guess what? Volume-wise, what we actually did out here today is that we went to 125.17 with volume. That's saying the 30-year is going to continue higher. We go to the that's saying the 10-year is going to continue higher, lower yield. We go over to the 30-year. We take a look at the 30-year, what we have with the 30-year. That went down to a price point of 138.02. We're at 138.05 right now, and we've done 443,000 contracts. That's a lot of contracts, no doubt, and I suspect, yeah, that probably wants to go to 138.03, but it's really not a big deal in the context of where we are. When you look at the actual rates across the world, this is what you have happening with the rates right now. We are at 2.4 still in the United States. Bottom line, you go over to Germany, that's still at 0.9%. You get Italy at 2.3. You get Spain at 2.1. The news all day, of course, is all, well, here, let's go to King Dollar. What you have with King Dollar is this, folks. King Dollar, you talk about an expansion on price. Amazing. Up 912 ticks. We're at 83.80, and, you know, bottom line is that King Dollar does want that 85.50 mark. The 85.50 mark has been hanging out there for quite a while. I do expect you're going to get up to that mark. The real key is going to be when you get to that mark, is just going to be the ABC structure on the way up, bringing you up to the 89 level. And what the news was out here today, folks, was the ECB is basically, they went into a negative interest rate for their banks, meaning if a bank puts money in the central bank, they charge them. That's the first part. They were already charging them. Now they're going to charge them more money. Then what they also did is that they're going to basically buy asset-backed securities. And guess what? It didn't do a thing for their stock market. The FTSE was flat, up $4. The DAX in Germany, that was up a little. The DAX in Germany was up 97. Bottom line is that you get more stimulus out here. The euro got absolutely crushed. The euro is trading at 129.43. And if we take a look at the euro on a longer-term basis, this euro is making its way down to this price point of 120. And that's a long way down from where we are. Our phone number is 877-927-6648. Let's go to Steve in Boston. Hey, Steve, what's going on?
Hey, Tom. How are you?
I'm doing great. You having a good day out there?
Well...
No, you're not, because you're in the gold market. Go ahead.
Yeah, I have 11, I've got 11 gold and silver stocks, and I was up about almost 15%, and now I'm back to my original capital at the moment, so
okay.
I'm kind of nervous.
Okay, so make sure
Should I cash out?
Well, you should definitely have stops in.
Yeah.
Here, give me a couple stocks so I can look at them. But this is what, here, let me go over what the full market's doing, and you stay right there, okay?
Okay.
So, inside the XAU, the HUI, the XAU right now is down at 293. It's breaking the swing point of 97.05, and I expect what you're probably going to have is there's going to be a break on volume. So what that means is that the XAU can get back to 92, and we're at 95. And 92 would be the June 18th day of strength. The HUI, if we go take a look at the HUI, same setup in the HUI. The HUI is down 653, and the gap was 225.96. So, I mean, it's going to go fill that gap at least. Let me have a couple of the stocks that you have.
All right. Well, I have MDW. Actually, you know, I'm not losing much on that one.
Okay, and you can't lose much on that one. Okay. MDW's out 3 cents. You're at 86. That's actually acting great compared to these other stocks.
Yeah, I got in that at 89 cents. So, you know, it was up a fair amount.
Okay, give me another one.
Okay, I got in AUMN at the current price, and I was up 60% at one point. So.
And you didn't take any money. Okay, so
no.
let's take a look. You get Golden Minerals. This is AUMN. The low is 42. The high is 152. So this stock How would you? This stock doesn't even take in any money. What are you doing here, man? Get out of this stock. This stock, I don't, this stock doesn't take in any money. Okay, this is a mining company focused on exploration development in Bolivia. I mean, do you understand that it doesn't take in any money?
Yes.
Okay.
Yeah, they had just restarted a mine, so I thought that would be a catalyst.
Okay. Well, hey, just stay right there, okay? We can go through a few others. I mean, just stay right there. We'll go through them as soon as you come back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You get the Dow down 25. Nasdaq's off 10. S&Ps are off $5. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 47, NASDAQ off 18, S&Ps are off 7.5. When you're looking at these S&Ps, folks, this is going to get really intriguing with 30 minutes. No, there's 40 minutes left. There's plenty of time left. So your S&P, we were talking about yesterday, the ABC structure on the way down. It blew that away, got that number going, but now guess what you have happening? You're at 1992, and now you get a price projection of 1975. And I know this sounds bizarre, but guess what? You can get that 1975 out here today because that break is pretty dramatic. We're talking with Steve from Boston. We're talking about the gold stocks. So let me have a few more, Steve.
Okay, SA was holding up my portfolio, and it's dropped quite a bit today, so I'm thinking maybe I should dump it.
What you should definitely do is this.
Yeah.
I would, it seems that, well, no, Seabridge is not a small one. The other two you gave me were small ones. Mm-hmm. I would, if you get 11 stocks, I would move 6 or 7 of them out. That's a lot of stocks, man.
Yeah.
Just to be prudent. Do you know what I'm saying?
Mm.
Yeah. What else? Give me another one.
Okay, I've got a bunch of, so I have PAS, PA, AS, I've got MUX, I've got AAU, I've got ASM, I've got
Move out half of them, man. Move out half of them, period. Mm-hmm. Move out half of them. That's for sure. Mm-hmm. Here, if we do PAS, PA, let's do this. Move that out right now. That's an ABC down. So your A is 15. Your B is it's not bad, $2. It's 12. That's still got another buck to go down, man. So I'd move that one out.
Okay. Yeah, I've got CDE.
Oh, Coeur d'Alene. What are you doing? Coeur d'Alene? That's the biggest dog in the world, man. Get rid of. Throw that out yesterday.
Okay.
I mean, you know that.
Yeah.
Well, why'd you buy it? Coeur d'Alene, Coeur d'Alene, what does the stock go from $70 to $6 or something? No, it went from $250. You know that, right?
Yeah, I just thought it was going to bounce to 12.
Listen, Coeur d'Alene is a dog. Mm-hmm. Anyway, go ahead. Give me another one.
All right, yeah, I'll give you the whole list.
No, go ahead. We can do it quick. Go ahead.
Yeah, ASM, AUMN.
No, stay with me. I'm going to pull them up. ASM.
Yeah.
Man, where do you get these stocks?
Avino Silver, yeah.
1 second. Oh, hold on. That's not bad. Stay right there. 1 second. Hold it. No. Okay, so I'm going to go yes, no. This is, okay? So what you want to do, folks, if you get gold stocks, take a list, all right, as we go through this. And it doesn't mean, this one is a good-looking one. Go ahead. Give me the next one.
Okay, MUX.
No, I know I'm going to tell you on that one. That's Rob McEwen's, but get rid of it, man, quick. Mm-hmm. Go ahead. Next one.
Okay, SVLC.
SVLC. Man, where do you... Silvercrest. That's not bad. Okay. That's a... Stay. You can stay on that one. That's a decent one. Go ahead.
And MDW, I mentioned that.
Stay there. That's going to get up 3 or 4 more cents or something.
Okay. And I have RIC, which has more than doubled since I got in it. Good.
Well, then you could. Okay, good. Take some bread off. That's gonna. Now take that bread off because well, 2 different things will end up happening. That's going to get hit also, and that's a nice expansion off on the down. Coming up. It just went from $1.40 to $2.60. Okay. Mm-hmm. That will basically give you some leeway, even selling half of them. You know what I'm saying? Because it doesn't seem you're in a loss yet. But then if you got 4, or if you got 5 left, that'll still give you, some leeway here. Next one.
AG.
This is going to be a close one. I own this one right now because I've been watching this one all day. So this is what AG is doing, right? You broke the swing point and you broke it with volume, so it's an ABC down, right? But it's finishing the ABC down. So the A point is 1122, the B's 950, 1050, 1150, $1.75, and the C was 1032, 932. Well, that's 875. So that wants to go to 890. That's another 50 cents down. Yeah. So that's you got to make that choice because it does want to go another 50 cents down. That wants to go to 890. Next one.
Okay. All right. So let's see. What have I not covered? I've got GPL.
So GPL wants to go to 104. You're at 106. I'd hang on to GPL.
Okay.
Okay.
And let's see, what else have I got? Is that all of them? 1, 2, 3, 4, 5, 6, 7, 8. No, that's not all of them. Let me go to my account. Let's see, where is it? Okay, account.
So if we look at a couple others where he's doing that, Rango Resources, that is down 247 right now. You get a B point that's taken out also. So your benchmarks on these folks go back to the 18th and 19th of June. That's where you want to be looking at, you know.
AAU.
AAU. So let's take a look at AAU.
It's held up okay on the weekly charts.
Yeah. Yeah, I'd stay right there on AAU. This one's interesting, man. So it went to the swing point, had volume, and gave it up on price. I mean, yeah, that can get down to 138. It's a 146, but that's not the end of the world.
Yeah.
Okay, man.
All right.
Go to work. Don't go to work. Have a great one, man. Have a safe one.
Okay, thank you, Tom.
Now let's go over to our man, Mr. Andy Heck. Don't forget, folks, every Tuesdays, Thursdays, right here at TFNN. Andy has an outstanding show, 5 to 6 Eastern Time, right after the show. He also has a great newsletter. Where you get it, you come to our website at TFNN. You go to newsletters, trading newsletters. You see the Technomental Commodity Report right there. Andy Heck, what's going on?
See if you could guess what I am. Quack, quack, quack.
Quack.
I'm a sitting duck. That's what gold is right here, I think.
Yeah, you think so?
I think so. I think it trades below 61.90, the lower the other day. You're going to see 12.40 on a crazy Friday fast.
12.40. Okay. So
real fast. I mean, tomorrow's Friday. Listen, with the dollar up a big figure here, you know, with the dollar up 1,000 points almost here,
yeah.
With the euro down 2 big figures, with the pound down, you know, look, history tells us we got to pay attention to this move in the dollar. Gold's a sitting duck here, in my opinion.
No, listen, I understand what you're saying. I guess what my question would be is that why is it gold down $50 or $70 today when this has been the largest move in the dollar?
Because there's not a lot of open interest in it, but they're going to come after it, and they like to come after it in Europe. There's not a lot of open interest in COMEX. You're going to see liquidation probably in Asia and Europe. That's what my gut's telling me here.
Yeah, no, listen, that makes sense. I mean, you know, what I found intriguing this morning, if you were listening to CNBC folks this morning, they had the Goldman head of commodities on. Did you hear that by any chance, Andy?
I didn't. It was on before my during the period of my beauty sleep.
So check this out, folks. And this is, to me, this was really cool. And what it was this. They were asking about gold, and they were asking about the dollar and commodities in general. And this happens a lot, folks. I'm just not talking about CNBC. I'm talking about in financial press, period, okay? And unfortunately, you know, they're good reporters on CNBC, but yet they don't know the market. And so the guy from Goldman, right, he turned around, he says, gold, he says, since January 2013, gold's gone from $1,800 down to $1,200. I'm saying to myself, $1,800? This guy's out of his mind.
Right.
Yeah. You stay right there, folks. Andy Heck, Tom O'Brien, we want to hear from you. 877-927-6648. Andy and I are coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 34 right now. Nasdaq off 14. S&Ps are off 5.5. We got our man, Mr. Andy Hecht, and we are talking commodities. So, Andy, this morning, now picture this. This is the head of Goldman Sachs commodity sector, right?
Jeff Curry, right?
Yeah. And so, Guess what he's saying, right? He says on the air, and this is just a total mind blower, I thought. He says on the air, they're asking about gold because, the dollar's going up. He says, listen, gold in 2013 went from $1,800 down to $1,250. And it's like, as soon as I heard that, I says, you know what, that's talk about disinformation. Now gold certainly has been going down for 3
Yeah, it peaked in 2011, not in 2013.
That's my point. That's my point. Okay? That's the first part. The second part was that he went on to say that they thought that gold was going to go to 1050. And what happens, folks, just so you understand, at 1150, that's what it takes all these gold miners to get it out of the ground. So if it goes to 1050, it's going to be just like a normal commodity. Guess what? Nothing's going to come out of the ground and gold's going to go up. You know.
Exactly.
So I thought it was an intriguing conversation, needless to say.
And you know what, Tom? A lot of these analysts that come on, they keep saying the same thing because eventually, in some decade, they'll be right.
Yeah, well, you know what I saw there? I saw what I got out of that is that here's the head of Goldman Sachs Commodities, right, that didn't know what he was talking about.
Right.
Factually.
Right. No,
that's pretty intense, man. That's pretty intense. You know,
it is.
They should know that upside down. You sleep with that, right? I mean, that's, you know, I was scratching I had to run to my computer and say, okay, hold it, man. Anyway.
You didn't even have to run to your computer. You just double-checked yourself. You knew in your head he was wrong.
No, I knew it was wrong, but I wanted to, you know, factually look at it. I said, oh, man, okay.
Right.
But anyway.
So all these markets, you know, oil, man, oil has been a wild ride. Trading oil is like riding a psychotic horse through a burning barn lately.
Oh.
But lower highs, and I think that we're going to see an 80 handle on oil.
Okay, so let's do this. Watch this. I was talking about this yesterday. Now watch this. I got to see how this is setting up right now. This is pretty sick. So, you know, I was talking about this yesterday. I don't know. Do you know a guy named Joe Napoli by any chance? No. No. Okay. So, this is a guy, you know, that is a Fibonacci trader, and what he has there's one patent that he works off, and it's called a railroad track. Okay. And specifically what it is that, and this works, well, nothing works all the time, but what happens is that at highs or at lows, right, when you get two volatile days like we got the Tuesday and Wednesday, right, that to him is a railroad track, and what they did on the way down, so technically it's set up as a railroad track. Fundamentally what his take is on it is that when you go from like a 95 to a 92, and your bottom's out there at the 92. It's the futures, you know, and that's the future taking all the stops out, right? Then you go right back up the next day. Now, the way it works, folks, is that the buy, okay? So watch this. I'm going to put this up. I'm just being the devil's advocate here for a second, okay? Because when I was talking about this, I just want to see how this signal, right now, the volume would still be too heavy, but it's not, it's you know, we came down on Tuesday with 320,000 contracts, and today we only did 236. So check this out. This is a trip. So he would set this up that the buy is at a 0.618 of the lows to the highs. Now, the 0.618 would be at 93.89. And it's not down there yet. You know, so it's going to be interesting. I'm just bringing this up as to how it's going to be down there, because thus far we've hit 94.16, and that says way too much volume, and that says it's going to go lower. But, you know, it's going to be interesting watching this whole thing shake out, no doubt.
You know, I'll tell you. When by the way, gold just took out Tuesday's low, so it's now 61.70, so not looking great. But just in terms of oil, Tom, I think we have to test production level. And a lot of this shale and a lot of this high-cost production that's coming out is in the low 80s. I'm looking for the curve to flatten out around $85. I think that, you know, it's just the trend's your friend here, and it hasn't bent at the end yet.
Yeah, no, listen, I understand what you're saying, and I'm sure that you saw that article probably about Andy Hall also, and that's the guy you work with, right?
Yes, I worked for him for 5 years, and I sat on the desk next to him every single day and bought lots of commodities with him over those years.
No, totally. And the story, folks, this is a guy that, you know, basically has made $100 million per year. And the story in Bloomberg yesterday was that he's having a couple tough years, and he's sending, you know, letters to his investors saying, hey, you know, the rest of the world's out of their mind. Bottom line is that
I agree. Let me just say, yes, and he says that shale is dead. But you know what, Tom? Long term, I agree with him. I think we'll go back down there.
Listen.
I just think that the next couple of months, you're going to see, you know, oil down in the 80s.
Well, you know what's so cool, man? Okay, so picture this. You know, you had already given us an update about who he is, and then I really start reading about him, right? And I remember that before, and then when I saw that article yesterday, and what he's doing, folks, he's buying long-term options out, and he's buying these things out like 2017, 2018, okay?
Yeah.
And I like what he's saying, too. I mean, I was saying...
But Tom, he's doing okay because oil's dropping in the front. My whole, I've been talking about this to you and on my show. Oil in December 2017... it's not going down. We dropped $10 here. We dropped from 104 to 94. That December 2017 oil didn't move.
No, I'm with you.
The spread went from 17 3/4 to $7.50.
Yeah,
it hasn't moved.
They said he was actually up. They think that he's actually up, even though oil's come down. Right.
Right. So those backs are strengthening. The backwardation is going away. Why? Because there's a lot of oil around, and all of this geopolitical stuff that goes on that used to cause oil to go up on it, it doesn't, because there's no supply worries. There's no fears of a supply shortage. Now, we get down into the low 80s, and they start, not producing as much from the Permian, from shale, from the Bakkens, from the tar sands. Then oil becomes a lot more geopolitically sensitive. But at this level, it's not.
Yeah, totally. No doubt.
And that's his thesis, and I agree with him. But you know what? He's unlike you and me and a lot of the traders who listen in, and investors who listen into TFNN, because he has a big pile of billions, and he can just buy it scaled down to zero.
Yeah.
And it's a long-term structure for him. He's willing to sit for 2-3 years. I'm not willing to sit for. I'll sit for 2-3 months, not 2-3 years.
Yeah, no, I can see that.
So it's a different orientation, and that's why he's been mega profitable, Tom.
Yeah, no doubt.
So interesting. Just quickly, what's going on in the markets here, in my markets, in the commodity markets? Yeah. You have a little bit of divergence. You have base metals prices are very strong. Copper, not so much, but aluminum and nickel and zinc, very strong. They were the worst performers last year. They're doing much better this year. And the meats, man, woof.
Yeah, I know. The meats, I saw the meats today, right.
The hog, I said it to you on the show, every dip has been a buy in cattle. And we got a really big dip from 161 down to 144. But now the rally is as extreme on the upside as the dip was on the downside. So these are some crazy markets. The only way I kind of like the hogs versus the cattle, because I just think at a 53% discount, pork is cheaper for dinner.
Yeah, no doubt.
It's my what's for dinner trade.
Yeah, no doubt, man.
So very interesting. I really think we got to keep our eyes on this dollar. This dollar, you got it dead right. I agreed with you all the way. I think 85 is the first target in the dollar index.
Yeah. Listen, if it's an ABC up, if it acts like anything like it does today, it's the ABC up. It's going to 89, so it's going to be
89. Gold can't hold here. We're going to have to test 1180. We're going to have to. It's just history. I got to go with history.
That's a beautiful thing, man. No doubt.
Yeah.
And listen, when you go on with history, folks, right after this program here, 5 to 6 o'clock tonight, get our man, Mr. Andy Hecht. And, of course, don't forget, at TFNN, we do live programming from 8 o'clock in the morning to 6 o'clock in the evening every trading day. We replay that all night. You can get it right on your cell phone at tfnn.mobi. You have a great one, safe one. Of course, we look forward to the program tonight.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. Let's go to Sam in New Jersey. Hey, Sam, what's going on?
Yeah, hi, Tom.
How are you?
Good, very good. Listen, I'd like your opinion on AEM.
You get an Eagle. It's down $1.55 today. The low's 23. The high's 42. Okay, so you're breaking one swing with volume. The other swing you're not breaking with volume. So we're at 3.2. That sets up probably 32.43.
Wow. Okay. You've answered my question. I bought it this morning. I didn't think it would break till that gap, but it did on June 19th.
Yes.
And it filled that. So all right.
Okay, man. Have a great one. Have a safe one. 877-927-6648. You get 15 minutes in, and what we're doing here, let's take a look. Yeah, at 4:35, you get the NYSE is going to come out at about 5:50. You're going to see more selling pressure coming into this closeout here. And what you do have in the S&P, folks, just like we were closing out yesterday, you already broke lower, have the juice behind it. So that's saying that future S&P will be at 1975. We're going to be right back.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get Marbell down 6 cents. American Express is off 53. We got Oxy down 13. You got IBM off $1.33. Let's go take a look at Apple. Apple had come off the highs yesterday, had some juice behind the move. Down 96 cents today. Not huge, but guess what? You're down with volume again. What this is going to set up is going to set up a weekly, also down with price and volume, and more than likely we'll see whether we're going to end up with volume off the high. You get volume off the high, folks, and that always sets up a much larger correction than it seems possible. And right now, because of, let's see, we're only in 3 days, and check this out. Apple in 3 days has already done more volume than it did going all the way back to the week of June 6th. Thus far, we've done 260 million shares. So the bottom line is that you're going to get the juice behind the move on the way down. And at 260, you're talking about 8.5. You're talking about 400 million. It's going to come in somewhere about 400 million. That, no doubt, is a big number. If we go over to the 3 Qs, the well, actually, let's go inside the NDX 100 first and see what the strength is and the weakness. Inside the NDX 100, the strength out here is Fastenal. That's up $1.84. Costco is up $3.63. That's a big number. We'll check that out. Amazon is up $6.91. Amazon's not going to be able to handle price. Amazon had been as high today as $3.49. It's into the gap. It's giving it up. Maximum integrated is up 57 cents. So that's putting the juice into the NDX 100, even though it's down. Taking it out, oh, guess what? Here they go again. The IBB. Okay, you got Alexa Pharmaceutical down 475. You remember, it was the IBB that took the NASDAQ South the first time. This time it was Apple that rang the bell. IBB's following it up, though. REGN is down 988. You got Biogen down 955, and Gilead is off 252. If we go over to the IBB, she's down 446, and boy, does this thing like to move when it moves. So let's bring this back. I'll put this on a year, and we'll put this on a weekly so we can see how this baby's setting up. So the high in the IBB is 275.40. First high that was established was February of this year, and you did 8.4 million. Guess what? We hit that high out here, and we're going to do all of about 3 million. This is a test of the high, couldn't handle price, couldn't handle volume, and what does that set up? That sets up an IBB at 235 to 215. So it's a big number on the way down. You know, we'll see where the rest of these babies do want to go. What's going to get intriguing here is this. As we pull back, the key is going to be, one of the keys inside the bond market is the bonds going to get any strength as we pull back? Thus far, today, meaning right now as the market's pulling back, bonds are still down. We're down 26 ticks. We're at 138.05. The yield still hasn't reached 2.5 inside the 10-year. What is intriguing is this, is that what I'm trying to get my head wrapped around on a fundamental basis a bit, is that there's plenty of analysts out there today saying that with the ECB going into monetizing assets, that would be the end of the bond market. What I don't quite, I'm trying to understand that fundamentally, and I can't get it. If someone can get it, explain it to me. The reason being is that as easy money gets easier, that just keeps rates down. It doesn't bring rates up. So it's like, to say that our bond is going to go up because that's happening, it's like, no, their rates are going to stay lower because they're Fed now. Their central bank is going to be buying that asset. So it's going to be interesting to see how this whole thing shakes out and why many folks, many economists think that, well, I'm not sure they're economists. I think that most of them are analysts. Why that would be the beginning of interest rates going up. Would seem to me that it would just be the opposite because of the aspect that, you know, David Tepper had said that too. I don't know what David Tepper said actually. I know David Tepper had said that he thought that was the end of the bond bull. And Tepper, folks, is one of the best money managers in the world. So the bottom line is you have to pay attention to what he's saying. There's no two ways about that. So it's going to be intriguing to see how this whole thing does shake out. Technically, right now, still, guess what? It's not even close. You know, technically, this setup inside the bonds is saying that bonds are going to go dramatically higher, not a small amount higher. You know, right now, if we take a look at this bond market, we've hit 140.24, actually 141.30, which is interesting about that. It was 142, that's ice. Bottom line, though, the way this is set up right now, this is still set up to get up to 149, and we're at 139. So, well, this is going to be intriguing how that bond does move. King dollar, no doubt, King dollar wants to go topside. Gold market, you know, here, let's go actually look at silver for a second, SIZ4. So if we go over to the silver market, we take a look at silver. SIZ4. Whoops. Come on, baby. There she is. Okay, we take a look at silver. Silver today, 38,000 contracts. Yeah, she's not holding price. So silver, you know, once it got into that 19th, which is 1975, is problematic. So silver, you're under 1915. So silver can go to 1870. That's a mind blower. If we do look at the GLD, though, if you want to see something that is intriguing, how we're coming back into these levels, they're still not selling the GLD. You know, the GLD is down today on 6 million shares, folks. You're coming into 10 million, and you're coming into where the strength is. You know, that strength is how we went topside on the 19th. You know. Tick-wise, so the real keys here, are you going to get follow through or not? You had volatility, and the volatility is in the market and in a big way. What we did do is that we got two separate minus 1,400 ticks. Okay? Now, that's saying that people are getting nervous. I mean, they get nervous, and they get nervous very quickly. You know, a minus 1,400 tick, we had the first one that was minus 1,462. That was at 1450. We got a second one at 1510, which is minus 1445. What you have to do in order to get a bottom going, folks, is that you have to get another something about 70 to 80% of that minus 1400, meaning that would come in, you know, 12, 1300 within a couple days. You get that, you'll get a bounce in the marketplace. Bottom line, I suspect coming into tomorrow, guess what? You know, coming into a Friday with the last couple days, there's going to be a selling market. You stay right there, folks. This is Tom O'Brien. This is TFNN. We're going to be coming right back. The Dow is down 12, Nasdaq's off 10, S&Ps are off 3. We're going to break back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. This is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 8, NASDAQ off 10, S&P's off $1.50. All of them, folks. Can you spell failure? Failed at the highs, with price, with volume. We take a look at the cash S&P first. This is what you have. Had a high out here today of 211.17. Right now, you're at 1996. And what that does is that it basically took out all the highs, had lighter volume, failed on price. What does that set up? If I go over today, I'm going to go to the future S&P for a second so I can show you what we did intraday coming into this close, which is going to set up a 1975 future S&P. So ESU, the mini S&P, what we're looking at is this. You came down, we came straight down from the 2011 today to 1990. We came down, we broke everything, okay? And what that sets up now, you broke with volume, but with vicious volume too, by the way. You hit a low out here today at 1990 with 69,000 contracts, folks. You bounce into the close, you know, which is, you know, expected on a down market with 41,000. What all of that's done is set up, your price projection on this one alone is 1975. What you could get out of here, 1975 is the first price projection. That's the bottom line. I expect what you're going to see, might see that overnight. We might see that tomorrow morning. Bottom line, I don't expect that we're going to go into that close by tomorrow night without seeing it. Dow Industrials. What do we do with the Dow Industrials? That went, you got a triple top up at the Dow. Had already double topped. Couldn't handle a double top. Decided to do a triple top. Couldn't handle the triple top. What does that set up? That sets up another rundown. We're at 17,069. That sets up the rundown to 16,333. NASDAQ Composite. What the composite couldn't do, and the composite has been the strongest indice, that couldn't hold price. It didn't get to its high, actually. Start peeling off the high. You know, we'll see how we come into, we're at 45.62. This will want to run to the 44.85 level. If you get back inside that, you're going to go a lot lower. So that in itself, because of the way that the NASDAQ Composite ran, that in itself is not a huge amount down, but you're talking about $80 here, you know, and that's today we're only down 10. So when you look percentage-wise, you look at some numbers, because what we had out here, that even though you're in red, the markets are still not down. You know, you had the Dow only down 0.5%. The S&P was down 0.2, and the NASDAQ's down 0.2. But the setup is dramatic. Why is the setup dramatic? Because what you had every indice, folks, get to the highs, fail the highs, and then come down with some juice inside them. Gold market. Let's go take a look at the gold market. Dollar went to the moon out here. Gold didn't go to hell in a handbag, but bottom line has pressure on it, big pressure. The high in gold today, $12.79. The low, $12.63. Did 139,000 contracts. That's lighter contracts. So that's saying, when we take a look at this, you know, number one, I suspect we're going to get into the 59 to 55 area. More than likely, you'll see that tomorrow. The low that was established in June 3rd is 12.41. You know, I don't think we're going to basically blow that away. You know, we'll see. King dollar. Let's go to King dollar, because King dollar, you talk about going topside. This thing went topside in an extraordinary way. We did 42,000 contracts, up 912 ticks. We're at 83.50, and you have the 85.50 mark is basically on that mark. I suspect we're going to get up there. The real key is going to be, do you go a straight line move up there, or we're going to build some cars before we get up there. Bond markets, we take a look at bonds. What you had, the 10-year bond was off, TYZ. 10-year bond was off 8 ticks out here today. You did 1.5 million contracts, not a big number. Bottom line, bonds still want higher price. 30-year bond, we take a look at the 30-year. 30-year had about 553,000 contracts. No, USZ 4 rather. We take a look at the 30-year, 455,000 contracts. And right now we're at 138, and bonds, the 30-year one's 132. The yield on the bond continues to is at 2.4. what that was all about, of course, we go to the euro, and with that Amalfi Coast is going to be looking real good next summer, folks, because right now you're at 129. We take a look at this. The euro got croaked out here. What the euro set up for to make the run now is 120. And how what we do when we get down to 120 is going to be crucial. 120, folks, is where on the downdraft in 2008, the euro got to 123. It did a counter-trend bounce up to 151. Then it dove down again to 118. That was in June of 2010. Had a nice counter-trend bounce again, got up to 149. Went south again at 120. And this is the kicker here. The bounce that the euro just did in the last year and a half, guess what? It only could get to 139. Couldn't get to 149. That sets up two different issues. 120 is a huge amount of support at 120. If, in fact, the euro breaks 120, then guess what? The euro is going to be at 89 or 82 where it was in the year 2000. So pack your bags and get to the Amalfi Coast because King Dollar is going to be to the moon. Just to understand, King Dollar will be at 121 if, in fact, that's where that's going because that's where King Dollar started from. The euro started from 81. That's what that correlation's all about. Let's go over to Apple. We take a look at Apple. We're talking about Apple. Apple had come off the highs yesterday, come off with volume, and we were talking about the amount of buys and sells of all these big operators inside Apple. What I found really intriguing this morning was this. Our man, Mr. Dave White, he came over to me this morning, and we were looking at it, and well, check this out. With Apple getting smoked yesterday, the largest buyer, Fidelity was out there. Fidelity owns 3.2% of Apple. They own 192 million shares. They were out there buying yesterday, and they couldn't hold it up. They bought 17 million shares yesterday. BlackRock, now BlackRock is the ETF. They bought 2.3 million. But guess what? Vanguard Group was selling. They sold, no, not Vanguard, Invesco. There she is, Invesco. Invesco sold 8.2 million shares. I expect when I wake up tomorrow morning, they'll sell more, and UBS. And so with that, that is saying that inside the large operators, now they have to, these folks had to say they were selling evidently because that is pure information, meaning the filing date was yesterday and the day before. There's a lot of other large operators that are selling that do not have to file. I thought even some of those funds, they don't own 5% of it, so I'm not sure why they have to file, whether they're doing it just to protect themselves. But the bottom line, what was so intriguing to me is that with Fidelity buying 17 million shares, it couldn't hold up. So that's a big number. That is showing that there's actually more weakness in Apple than we expected. 877-927-6648. We go over to the XLE. We take a look at the XLE. What we have with the XLE is this. This looks like a large ABC down. This is the oil and gas sector. That came down to $1.32 today. Huge expansion with volume, 12 million shares. Your B point has 13.2 million. ExxonMobil, which is the king not only of the Dow Industrials, one of the kings, and the S&P. This is building cause to blow away that B point. The B point on ExxonMobil is 97.63. We're at 98.36 right now. I had an expansion of volume also. We did 9.6 million. British Petroleum, that got absolutely toasted and roasted out here today. That was down 282, monster volume, 54 million shares. What that's all about is that court case went the wrong way on them out here today. And if we do take a look at this is what's really going to be wild about British Petroleum. When this oil spill took place in 2010, the low is $26. Now, the high of that low, folks, is $39.41. So if you're interested in an oil stock, bottom line, keep your eye on that $39.41 because you could get a rejection of price at that particular point. Then you have a consolidation and a decent dividend. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So you had the Dow Industrials finished down 8, NASDAQ off 10, S&Ps were basically down a couple bucks. We take a look at some of the Dow stocks out here, and let's go to the financials next. You had the XLE, that wants to go south, looks like an ABC structure on the way down. The financials still hung up there. We flat market. It did get over its high, closed underneath it. You know, we'll see how we're at 23.43 right now. We'll see how it wants to get into this 23.16 area. BRK, which is the largest, that's Berkshire Hathaway, which is the largest weighting inside the financials right now, that stayed at highs. You know, so we'll see whether that wants to break. You have J.P. Morgan Chase. We take a look at J.P. Morgan. She stayed at the highs. Bank of America, BAC. It's kind of intriguing, actually. They all stayed up there. They're all up penny or 2 pennies. Some of the high volume stocks in a low volume market that we had out here today. You had Intel was up 35 cents. GE was flat. We had Walgreens was up 2.24. Let's go over to Walgreens and take a look at see what's happening with WAG. So Walgreens, dead cat bounce. Interesting. Okay, so Walgreens had gone from a price point of 76, has a high volume low of 57. Bottom line is there's nothing there. Pretty amazing. Now, Amazon. Let's go to Amazon, because what you have here is that the Amazon came into the gap, has been in the gap for a bit, meaning when Amazon gapped down, it gapped down, folks, from 364 on July 24th and then opened at 314. Went topside and hit 349. Gave that price up today and gave it the swing point up. That sets up, okay, now it's going to go after the lows again, 315. It's going to be intriguing to watch this whole baby play out. Gold market. Now, let's talk gold and silver. So, dollar goes up huge way. Gold itself, the actual physical metal, did not get killed. You know, for the dollar being up, it was up 980 ticks at one point, folks. So it's pretty amazing that gold was only down $8. Now, the XAU and the HUI, let's take a look at them. XAU first was down 313. We are, the gap that it wants to fill, first off, is $94.74. We hit $94.83. I suspect we're going to see that thing get filled tomorrow. And what you can do, no doubt, is actually get back into 92.08. That's where the sign of strength was. When we take a look at the volume characteristic, we won't get that till tomorrow, but what we did have is that yesterday the XA was coming down on lighter volume. I expect it was on a lot heavier volume today. HUI, we take a look at the Gold Bugs Index, same setup in the Gold Bugs Index. What we did in the Gold Bugs is this. You went down 836, you're at 227, and the gap on the HUI was 225. So it's past the gap. That says it's going to go to the beginning of that gap, of that day, which is 220. We take a look at a couple of the gold equities, and we'll start with Gold Corp. Why? Because they're going after their swing points out here today. So if we look at Gold Corp, this is what you have. It took out a B point of an ABC structure down. If you own these, you want to do these ABC structures on the way down, folks. The reason being is that what you're going to see here is that a couple of them have already finished the ABC down. So if I look at Gold Corp, your A point on Gold Corp is 29.65. Your B is 26.71. So $3, right? Yeah, $3, $2.90 to be exact. Your C is 28.15. So that gives you a 25.15 level. You're already at 25.95. You're coming into the strength from the 18th and 19th. And you're doing that. Today we did 6.4 million versus 7.3. So depending where you are inside the metals market, I expect that that level right there more than likely is going to hold. That's on your daily. We put this on a weekly. What you're going to see on the weekly is this. On the weekly, when we went topside with 34 million. This has come down thus far on 16 million. So what does that mean? That means that you're definitely coming down on lighter volume, because right now we're at 3 days in the marketplace. If it's 16 million, that's going to set up about a 15 million 5-day going into no, it's going to set up it's going to set up a 25 million 5-day versus a 34 million. We go and take a look at Rango Resources, GOLD. This has always been one of the strongest gold stocks out here. This was down $2.47 today. You broke the B point. That B point had 318,000 shares. So that means it broke it with volume, ABC down. Your A point on this is 89. Your B is 80, so you get $9. Your C is 84, which gives you 76, right? 76 is also 77.90 is at that sign of strength. We go take a look at Anico Eagle, AEM. What do you have with Anico Eagle? Anico Eagle came down with 3.5 million shares. Now, this one's intriguing because It wanted to test its high volume low. It had a high volume low of $36 with 4.5 million. It blew past that, but with 3.5 million. Okay, so this little baby here is setting up that it's going to finish its ABC structure on the way down, but yet it looks like it's going to come into that level with lighter volume. And the bottom of that is $33.02. And right now we've done 6.8 million shares. The benchmark is 15 million, so you get 6. That means it's going to go 10 million versus 15. So this is going to get intriguing as to how the gold equities, the silver equities are going to continue to react, because the dollar wants to get up to those levels. That's where the shakeout is. The real key is going to be, does it do this non-stop? We take a look at, we go over to the dollar and we take a look at this dollar. You talk about wide price spread, accelerated volume today. It's pretty dramatic, actually. Let me do this. I want to do this. If I take this, see, it's hard to tell whether you get another ABC structure inside this. That's what's going on here. We finished one ABC. The real key is going to be, okay, if that's an ABC, actually what I'm going to do is I'm going to take the dollar and I'm going to put this on a continuous contract. The reason being is that it's going to get clearer looking at this on a weekly as to see what we have. Okay, so yeah, on a weekly, folks, there's no stopping this. Yeah, there's no stopping this to go up to that $85. That's the bottom line. You're already into the top of the range. The top of the range in 2013, the top of the range is 84.96. The swing it was going after it absolutely blew away, which is 83.62. We take a look at it. Yeah, bottom line, that's where it wants to go. So the real key is going to be, as that moves up to that level, what is going to happen inside the metals market and the commodity market in general. If we go over to the oil contract, oil got hit out here today. Gasoline is going to be one of the benefits in an extraordinary way, and so isn't heating oil, folks, coming this winter. Gasoline right now, down 2 pennies today at 2.60. Gasoline looks to me like a large ABC structure on the way down. That little baby will be running out at approximately 2.50. No, it's 2.25. Wholesale gas will be 2.25. That'll put gas at the pump, folks, at 2.75. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow down 8, NASDAQ off 10, S&P's off $1. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow, NASDAQ, S&Ps. They all fell to the highs out here, got over the highs, closed underneath them, had lighter volume. After the close out here, you had the gap. GPS is the symbol. That closed, that's the clothing store, of course. That closed at $46.59. It is trading right now at $43.88. Numbers go like this in the gap. So let's take a look. They see September chain store sales up 4%. Evidently, that's not enough. Their comp sales were down 6%. That's a big number. August sales were down 2% versus an estimate of up 1.4. So they were estimating that their sales in August would be up 1.7, and they actually were down 2%. If we take a look at this on a technical basis, what you do have set up is this. This is a classic double top. All these charts are getting really interesting, and it's what you have on this one. So the gap had a high, the first high established August of last year. That was at $46.53. You went from $43.53 down to $36. We came back up, and we got over that high today, okay, which is just amazing. So, but guess what? You did it on lighter volume, right? Then you gave it up on price. So what we're going to have here is this. Thus far, we've done 10 million shares. The benchmark was 24 million. But as we had 10, that had set up the correlation at the end of this week about 15 to 16 million versus 25 million. You didn't make it on price, didn't make it on volume. Well, you made it on price, didn't make it on volume. What that sets up is that now the pullback will be down to the bottom of this consolidation that it's been in. And, we'll see how it comes into this $36 level. So it's a big number, certainly on the way down also. And, the retail market, folks, okay, you got the, well, let's go over to Costco, because Costco came in with some good numbers. So Gap couldn't handle it. Costco was up $3.80 out here. $1.25 it's trading at with juice, with volume. So if we bring Costco back into a 2-year basis, what you're going to see is that we're at 125.15. That is going after its highs. Now, check this out. This is pretty cool. That's going after its highs, and it looks like it's going to have higher volume. And if in fact, that's what we get, this could be a large ABC structure on the way up. I mean, a big one, too. Okay, so on a monthly basis, you get 43 million shares. The high, we're right at it. It's 125.96. You're at 7.8. We get the whole month to do it. Costco is going to be something you want to keep your eye around. And it'd be interesting. It's like, how is Costco basically doing so well, getting everyone's business? Because what we do have in Costco also is this, is that the retracement of Costco only went from 125 to 109. I'm talking about in the past year now. Goes sideways. As it starts up to the high again, the volume starts expanding again. So how we take that baby out is going to be dramatic, because that ABC structure is a monster. We go over to Tesla. Tesla's been an ABC structure on the way up. And that little baby, you're 286.04 now. They're going to be opening a Giga battery factory in Nevada. And, bottom line, it looks to me like she's just about finishing that ABC structure on the way up. We'll see what other kind of juice Tesla can get going. The short position on Tesla continues to push that baby higher. Right now, the short position is 27.3%. That is one monster number. So if we go over to Europe, what you have is this. When you take a look at Europe, this is what you have. In the UK, we're at 28.77, and that failed at the high once again. The 28.94 failed. 68.94. That failed. I won't get the volume until tomorrow morning. The DAX did stay up. We'll see whether the DAX can hang up there tomorrow. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. How about you?
I am, thank you. Appreciate it. What are we going to look at?
I was really just calling to comment on the fact that I'm really enjoying the new format with you being there when the market's still open. That's a great situation. I'm glad that you made that change.
I really appreciate it, man. And I love it's amazing, folks. When I started this program, I think I started in 1996, so I think it's 18 years old. And I started at 3 o'clock in the afternoon. And I started, when the market was open. And then what had happened is that the 4 to 6, there was actually more traffic because I started in New England, so there was so much traffic that I wanted to get in the traffic. And now, of course, all of that has changed because everything's digital, man. And it's so much, I enjoy it so much more being when the market's open also, Brent. Do you know what I mean? You just get more out of it, I think.
Yeah, it's been great. It took me a while to get adjusted because I'm so programmed to you coming on at 1 o'clock my time, and so I had to catch myself, the first week or so, and now I'm used to it, but I really like it.
I appreciate it. Now you can eat lunch with us, man.
That's the Well, and I heard you talking about Gap. It's funny, as that came up on the Gartley scan a couple of days ago with almost the exact price it hit today, so as a bearish Gartley. So. Yeah,
that's intense, man. It really is, because what we've seen out here, folks, is that there's a lot of equities, that basically have double topped, and we'll see if we get juice coming off the highs of them. I can tell you that this, today, meaning we had deviance in the marketplace, meaning that yesterday, Apple starts taking the NASDAQ south. What happens today is that Europe's up, our markets try to get up, and then all of them give it up on price and volume. So the bottom line is that will we get the follow through tomorrow, and will that follow through come with volume? And this is what's going to be hard, folks, and Brent, is that we're back to normal trading, meaning that it's not Friday in the summer. So if in fact we go south, what you're gonna if we're gonna continue going south, you need expansion in volume. I mean, that's if we go north, bottom line, we'll see whether it's still lighter volume. But it's the volatility has increased dramatically, and it's just not in the equity market, folks. The commodity market, and the biggest move, of course, is currencies. And if you've been around for a while, you know that fast currency moves are problematic for everyone, not just for markets in general, because the hedging mechanism. These large companies today, on a fundamental basis, either lost or made a lot of money. Most of them probably lost because of the way that the dollar went, So, well, listen, man, we appreciate you growling and prowling out here with us.
Oh, yeah, I really appreciate everything you do, Tom. You've assembled a great group of people. They're all great technicians. And I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life. So I appreciate everything you do. Just keep doing it. And
thanks so much.
Happy to have you out there. You take care. Huh?
You're awesome, man. Thank you so much. And listen, folks, what we don't do here, or I don't do for sure, is thank each and every one of you enough. Because the bottom line is that without all you tigers and tigresses growling and prowling, we'd have zero, okay? And we really do appreciate it. And, of course, I want to thank all my crew here at TFNN, because we have quite a crew, folks, and, of course, all the talk hosts. And it's intriguing over the years how just you build one block on top of another block on top of another block. And the bottom line is that, little by little, it gets a little bit bigger and bigger and bigger. So we do appreciate you out here growling and prowling with us. And don't forget, folks, everything is getting digital in an amazing way out here. So Tiger TV itself, if you get us on the radio, remember you can get us on your cell phone at tfnn.mobi. If you're watching Tiger TV, you can go on your cell phone at tfnn.com, hit Tiger TV, and you're going to get us digitally. What you are also going to see is that my son's going to kill me. My son runs this company, folks. But bottom line is that we have just gone and purchased quite a bit of new equipment, and we're going to be doing an upgrade that should be extraordinary. And we're just waiting for that to come in right now. So you're going to see something that we hope is going to even do something more extraordinary. And you should see that. I suspect that's still going to take 2 to 3 weeks. We'll test drive it once we get it in here. But the upgrade should be quite substantial when you're watching Tiger TV. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We have the Dow Industrials finished down 8, NASDAQ off 10, S&P's off 2.5. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow finish off 8, NASDAQ off 10, S&P's off a buck. And, of course, don't forget, our man, Mr. Andy Hecht's going to be coming up with you next. Growling a problem at you to 5 to 6. That's every Tuesday and Thursday, folks. We go over and let's go take a look at that silver market. So if we take a look at the SLV inside silver, that's the ETF for silver. SLV right now is at $18.32. It was down 11 cents out here today. And if you put this now, so watch this. We're at 1832. The low that was established in May of this year rather, is 1791. The high of that low is 1822. we put this on a weekly basis, what you're going to see is that this low here is going to be very tough to basically take out, folks. And this is why. When we came down, we're into the top of the bar, which is 19. Actually, there's two different bars here, isn't there? Interesting. 1 second. 18. Okay, so this is the bar we're actually into. So the low that was established in June of 2013 was $17.75. The top of that low, which markets like to go into, folks, was $19.19. Now, you can see that we're at $18.32. So we're already deep inside that level. So what does that set up? That sets up that you can get down there. That low has 93 million shares. Thus far, folks, okay, we've only done, if I bring this out to a weekly, we've done 6 5s to 30. So the correlation will be 30 million going against 93. So inside that correlation, it's like, okay, you're going to need a lot more volume to break that down. Let's go to the GLD. We take a look at the GLD and inside of this, because we know that the strength inside the dollar is there. Now watch the GLD. This is pretty cool because I'm going to line this up with you on a fundamental basis as to the price of gold. So the GLD right now is at 121. Now the GLD has two separate areas because the gold contract traded different than the silver. And it has two separate areas with monster volume. I'm going to go to the first one first, which is the June 2013. So June 2013, the high of the GLD was 124, the low is 114. You did 109 million shares there on the weekly basis. Then we went all the way back up to 137. We come back down and tested it. Now, the first time we tested it, the high of the low is 120.77. I suspect we're going to get into that probably going to try to tomorrow. That level there, folks, has 63 million shares. Correlation, 63 million into 109. Rejected lower price, had lighter volume. Guess what? We go from 114, go up to 133. Okay, so now, here we go, because this is where we are right now. Thus far, the GLD has done 20 million shares, which sets up a 6, 12, 18, 7... It says that sets up 35 million for the week. And what I'm doing, of course, by the way, is I'm adding in a day because of Labor Day. So 35 million is going to be basically close, give or take 1 or 2 million. There's going to be the volume for the week. 35 million is going to be into 63, is into 109. So that setup there, folks, is a setup for rejection of lower price. You know, we know we're going to have lighter volume. The key is it going to reject price? Because we know it can go lower with lighter volume. When that happens, you'll spin around at some point and get higher again. But bottom line, at this point, you have dramatically lighter volume as you're going down there. When you look at the actual gold contract, and we're coming into a Friday in the gold contract, and don't forget, folks, on Fridays, I do a show with Daryl Martin. It's the Nadex Bull and Bear Binary Option Hour. We do that at 10 o'clock in the morning. So our man, Mr. John Logan, kicks us off at 8. Steve Rhodes then at 9. Daryl and I at 10. Basil at 11. Nico and Paige at noon. We got Daryl at 1. David at 2. And then I'm back here from 3 to 5. And actually, David and I do a technology show from 4 to 5 on Fridays. Gold on Fridays, when it's down like this, it's always problematic, okay? So what do we have? Well, we did 140,000 contracts today. Now, that is lighter than how we came down on Tuesday. Tuesday, what we did, folks, is we did 191,000. So I suspect they're going to try to hit it tomorrow. But my take on it right now is that we're only going to go down to about 159 to 154 and, in fact, you know, get a rejection of lower price on lighter volume. So we'll see how this baby does shake out. Now, where would that be in a fundamental basis? Well, what's intriguing to me right now is this, is that the dollar index went to the moon. and gold only was down $8. And if you've been in the gold market for a while, you know that the dollar index could be up 200 to 300 ticks, and gold could be down $30 to $40. They sold it down. There's no two ways about that. But guess what? They didn't get price destruction going, and they didn't get volume going simultaneously. That's on the technical basis. On the fundamental basis, we're at 1261. It still takes 1150 to 1170 to get gold out of the ground, meaning to mine gold, to get 1 ounce of gold. You got to remember something. You get 10 tons of dirt. To get 1 ounce of gold out of the ground, you need 10 tons of dirt. That's pretty amazing. And then the kicker, so check out the kicker. This is what kicker. Bottom line, hey, we'll see how this shakes out, and we're going to see that real quickly tomorrow. That's what it really comes down to. XAU, HUI, they took out that swing point. They're going to need lighter volume. They're going back to the June 18th and 19th days of strength. That's where these babies are going back to. S&Ps, I expect what you're going to see out here tomorrow. You had a failure out here, and the Dow, the NASDAQ, the S&P, and the Russell 2000 in harmony, all of them. I expect what you're going to see out here tomorrow is that you're going to see more selling inside of the S&P. What's going to get intriguing out here in the morning is this, is that, so picture, if you remember when our Fed was pumping money in, and they still are, but they were pumping a lot more money in, a couple years ago. Of course, our markets continued going higher. Well, the European Central Bank, folks, that's exactly what they're going to be doing on a continual basis right now. They're going to buy asset-backed securities. They've made the rates negative for the banks, meaning that the banks, the last thing the banks are going to do is that they're not going to be able to take the money, the extra money they have every night, and put it to the central bank. Why? Because the central bank is charging them so much money. It's a negative interest rate. You stay right there, folks. The man, Mr. Andy Hecht's coming up. He's going to be growling the problem with you at the Technomental Commodity Hour. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there with Andy. He's coming right up. Go get him, folks.